Oh, there's no way this thing can go above 100, right? And wrong.
Today, folks, that's right. Oh my god, my boy, the six-figure mind of Matt Money, decided last week he was gonna short GameStop, and I'm sure we all know how that trade worked out. But fortunately for you, and even more fortunately for me, my friend decided to publicize this information last week on our live stream, which if you don't join our live stream channel, what the hell is wrong with you? Head on over to the Passive Income Educator, hit that subscribe button, get us over 1,000 subscribers. But damn, I'm gonna bring a clip of that here for you guys. And before I do, I just gotta talk about the pivotal trades that are happening this week, guys. We are heading into earnings with the two biggest conglomerates in e-commerce, baby. Alibaba and Amazon. We get Alibaba before market opens tomorrow. We get Amazon after market close. And look, I'm not a financial advisor. Don't listen to a kid that lives in his parents' basement, but oh my God, listen up, folks, because if you didn't get these trades on, what is wrong with you? I mean, Baba was a screaming buy over the last month. Amazon, I mean, after the gangbuster Facebook earnings, the 50% EPS growth numbers, these things all correlate together because if you buy shit on Amazon or Baba, you're selling it through your Facebook ads. This is the whole e-commerce ecosystem. You buy from Baba, you sell on Amazon, you promote on Facebook. So get in your seat, strap your buckles on here, folks, and just get ready for this. Let me show you my trades because I have a lot leveraged in Baba. When Baba got beaten into the ground, you know, over Ant Group, over Jack Ma missing, what people fail to recognize is the Western media chases a narrative that destroys a stock's valuation, which gives you an incredible buying opportunity if you can recognize these. And oh my God, I got to put a whole course together surrounding this idea because when I got into Baba, guys, two things were happening. Jack Ma was missing and Ant Group was getting burned alive because they were huge. It was going to be the largest IPO in China, and China was terrified it was going to destroy the financial system. But the narrative in the Western world was China's evil. They're going to take over Baba. They made Jack Ma disappear, and the stock got suppressed by 30%. This was a company that in December announced record sales, guys, and it dropped 30%. Most people aren't even aware Ant Group doesn't even make up a large percentage of Alibaba's revenue. So I am buckled up. I am excited because in my accounts, my Alibaba position, in my managed account, this is all line of credit. I borrowed all of this from the bank. I wish I borrowed more, but damn it, sometimes you have to be risk tolerated and understand when you're overstepping your bounds because yes, shit happens in life. Sometimes this stuff doesn't always work out. But luckily in this circumstance, at least for now, I haven't hit the sold button yet. I'm sitting up 13% of $1,282, and that's all bank money, baby. In my retirement account, this is where I bought Baba after I sold Tesla, liquidated Tesla, felt Baba might have been a better position, and these are my long-term shares. I'm going to be holding these suckers for a little while into the future here, folks, with no real plan to sell anytime soon. I got 28 shares in this account, currently up 14%, $928. But then finally, in my TFSA, this is like a midterm trade for me because basically when I saw this dip on Alibaba, I couldn't help myself. I ended up selling GEO Group for a loss, which hit the like, if you remember that, guys. And I put all of that into Alibaba because I still thought it was a better deal. So I'm up 4.9% in this account. But so just putting this aside, guys, yes, these companies are trading up going into earnings. I'm not 100% sure what's going to happen. I was so shocked that after earnings with Apple and Facebook, they went down. So all tech, all Amazon, all Baba e-commerce is a friggin' buy right now. I don't care what you say. I don't care about your valuation metrics because these things are cheap. And I'm going to be putting my money where my mouth is, guys, because these companies are hitting historical record earnings that nobody would have imagined even 5 years ago. So anyways, putting that aside, let's see what we can't learn, guys, from somebody that is already capable of being financially free, that understands his risk tolerance and may have overstepped his bounds a little bit with GME, but damn it, the lessons that we can learn from this are incredible. So please enjoy if you haven't seen it already, but stay cool, stay awesome, and I'll catch you tomorrow.
You want to talk about people that have lost in the options world of shorting GameStop? Well, Matt himself has been one of the unfortunate few to lose money in options plays. But where do we start, Matt? Holy shit.
Oh, man. I don't know. I mean, I think, yeah, for those of the folks that are probably listening to this maybe after the fact or even now that are contemplating getting into the options game, I think just recognize that options are slightly more complex than just investing in stocks. It's not as easy as buying a stock or shorting a stock. It's a multitude of different things. And so just make sure, I feel what I will say is it did put me back a couple months in terms of growth. So it's not a big deal, but I feel like I've come out of the situation feeling confident that I know a good strategy that works for me. And when I deviate from that strategy, it doesn't go well for me. So I've done that now twice or three times doing the same exact thing. And that's shorting companies that I don't want to be involved in. Right. And so first and foremost, just acknowledge that, sometimes when you sell naked calls, like you basically are opening up yourself to unlimited risk. And that's the case. I mean, if you look at what happened with GameStop, I mean, it's just gone up and up and up and up. And actually, funny enough, in January, when I saw that the Chewy CEO was kind of getting onto the board over there, it was like, I don't know, mid-Jan or something like that. I remember putting it in the WhatsApp group and being like, maybe I should buy it. And then I forgot about it up until, I guess, late last week. And then I was like, oh, there's no way this thing can go above 100, right? And wrong. So always just make sure that if you are going to do something risky like this, to maybe potentially buy a longer call, right? Where that they could potentially offset some of that losses. It kind of sets a maximum loss on your behalf. So
this is the vibe of this whole entire show tonight is going to be a real damper on your mood, because Matt's already bringing this into the real world all of a sudden.
No. The cool thing is, though, is it's like I have been in a better mood, even though I've lost a couple months worth of my progress. I'm in a better mood knowing that I made the mistake early. Like, this mistake has hurt me enough where I'm like, no, like, I know my strategy. Stick to your fucking strategy, deviate from it, and just put your time in. Don't try to get rich quick, and stick to my strategy. And that's what I told the guys this week when I lost money. I put a voice note in the membership group a couple days ago, and I was like, look, man, like, find out what works for you, hone in on it. Don't just like, make sure that you're investing for what we talk about all the time, and that I can like stop controlling the conversation, because I feel like I'm starting this off when it's a really cool conversation, like I'm starting it off on a damper note. But I think that this is a great opportunity for folks to just listen and say, hey man, like, I'm part of the $19 billion of people that have lost money.
Yeah,
right?
You're taking like the other opposite.
But the other thing is, though, it's not over, and it's going to come back down as well. And I think people are just like forgetting that that's even a thing. And it's like, we've lost $19 billion to date, right? That's not talking about how much people are going to be bag holding on the way down, thinking, okay, well, it went to 120 and then it went back up to 400 again. It's going to do the same. And next thing you know, it's back down at $40 again, and people are going to get hurt. But
that's the stance right now, right? Like, that's the front. I mean, for those that aren't aware, I guess the GameStop thing is going to be over the weekend when those shorts have to cover or whatever the heck's going to happen here. But well, finish your statement here, and then we'll get into some insanity.
So yeah, I mean, just to finish it up, man. I mean, just recognize that there are tried and true methods that you can use. This is a one-off, I would say. It happens very frequently. The only time I've known that it happened to this extent was back in 2008 with Volkswagen. And that was very interesting. Volkswagen became the most valuable company in the world at the time. And in 2008, there were some pretty damn big companies. You had Exxon, which was still, over 500 billion. You had Apple, which was climbing its ranks as well, and just come out with the iPhone that year, if you think about it. And, Microsoft was still pretty big. You had $300, $400 billion companies that at one point Volkswagen was bigger than, even though, and it's the same situation. It was like 80% shorted and stuff like that. But what I want to get to is understand your strategy, your objective, time horizon. Risk tolerance is the biggest part. So in this case, like, I just completely ignored my risk tolerance, and that's what burnt me on this one. Fourth, how often you're going to put money into the market, and how actively and passively you want to trade. And Jason said it a really good piece as well. Like, if you're not going to be watching this thing like a hawk, like, don't get involved, right? Like, he said it basically straight up. He's just like, I was watching it on one monitor and doing work on the other. And it's just like, well, if you kind of just put your money in on like a hope and a prayer, like, and put in like a trailing stop, like, you could have gotten screwed. And I've seen a lot of folks
the trailing stop,
putting in a trailing stop. It's like, I don't think people understand how trailing stops work. Like, if there's a halt, like we've seen many times over like the week with GameStop, if it opens up below your trailing stop, it's going to execute like a market maker. Right, so like if it gapped down from 205 and your stop loss was 200, and it opens back up after that halt at 120, it's selling at 120. It's not selling at 200. And I don't think people recognize that. But anyway, I'm done like dominating the conversation.
It's good, man. I
wanted to open it up that way, and especially for the folks that are going to be listening to this afterwards, because we do get about 800 or so people that watch this over the course of the week.